The big event today is Reserve Bank of India credit policy. What are the expectations? Let's discuss that with Mr. S.L. Bansal. He represents OBC, and along with him Siddharth Sanyal. He's Chief India Economist with Barclays Bank. Gentlemen, good morning. Thank you for joining us. Mr. Bansal, you go first. According to the ET Now poll, 95% of the bankers and bond fund managers, they do not expect a rate cut today. So are you part of that 95% or are you part of that 5%?
No, I am part of that 5% because there are two reasons. Till Thursday, this view of 95% was good, but now since the government has taken various initiatives which has changed the mood of the economy, now the Reserve Bank of India would like to go with the sentiments and they would like to give a push to this positive feel-good factor which has gone into the market. And maybe Reserve Bank of India governor may be in dilemma whether to reduce the repo rate or to reduce the CRR. To my mind, they can reduce CRR by 25 basis points, so that indications will be that their stance for the inflation will continue. But slightly liquidity will be injected. 25 basis point means another 17,000 crore will come into the market, which is not going to give any major push to the inflation. But again, a feel-good factor will go, and all-round positiveness, which is appearing in the economy for last 3-4 days, will continue.
Siddharth, hi, morning. Which camp do you belong to? The 95% of people on street who say it is going to be a status quo policy, or the 25 who believe that perhaps the RBI may surprise and we could see a 25 bips rate cut?
Well, I think compared to the 95-5 decomposition, the actual call is a lot closer. I tend to be incidentally on that 5% camp as well. The reason is as follows. So there had been a bit of ups and downs last week. Thursday the market started believing that there can be something on the from the RBI's kitty as well. The Friday's inflation number again created a bit of doubt. But I'd suggest, why don't you look at it this way? So RBI had earlier made it pretty clear that if there is some kind of upside pressure in headline inflation because of diesel price hike, they won't mind. Now, the surprise in Friday's inflation number which had come entirely due to the upside revision in electricity prices. Now, in essence, there is no difference whatsoever whether there is a diesel price upside revision or an electricity price upside revision. Both of them are actually constraining for the economy. If the government measures or the ECB measures are constraining for the economy, the central bank need not be doubly constraining on top of that. So we think there is a case for some kind of policy support at this juncture. And if someone wants actually to look at the headline inflation, there will not be any room to ease for the next at least 2-3 months as well. So can the central bank wait till that long? My sense is that it might be a little difficult.
Right, Mr. Bansal, Reserve Bank of India has maintained that in order to get a rate cut, they need two things. Number one, inflation has to come down. B, some strong fiscal measures need to be undertaken. Now, Government of India for sure has addressed the part 2, but the part 1, which is inflation, because global liquidity is strong, is unlikely is going to be the pain point going forward as well.
You are right, but the point is Reserve Bank of India has all along been maintaining that you have to take strong steps on the fiscal front. Now, on fiscal front, the Government of India has taken few steps to invite FDIs and FIs. Number 2, they have passed on this diesel hike. This is a very bold step. In today's scenario, when we are having a coalition government, increasing diesel price by 5 rupees, I think it's a very, very bold step. And the Reserve Bank of India would like to support the government in their endeavor. And to my mind, they will give some indication, because 25 basis point cut in repo will naturally not going to make much of the difference as far as the cost structure of the banks are concerned. But it will give a right signal, and the bankers will be encouraged to take the bold step for reduction in base rate. You will appreciate that on 16th August, OBC was the first bank to cut the base rate token by 10 basis point, although no bank has followed it. But point is, it's a urgent need to give a positive signal to the market that now the rates of interest have peaked. Now the time has come when the rate of interest will start falling. Therefore, Reserve Bank of India, to my mind, should follow this policy and maybe follow one of the alternative, either cut in the repo rate which will be token only. But cut in cash reserve ratio by 25 basis point will be a very, very welcome step, because it will add to the kitty of the bank. Non-interest paying asset will come to our side, and then we will be in a position to take a call on the reduction of interest rate.
Siddharth, what is your sense on what the quantum of the rate cut could be today? What do you think the RBI is going to do in terms of CRR, and can we see more liquidity infusion? And for the remainder of the financial year, what is your expectation as well?
To answer your second question first, over the course of the full financial year, we are pretty aggressive on our rate cut calls. We think the RBI will eventually deliver a cumulative another 100 basis points from here on during this full fiscal year. Given the fact that the headroom from the fiscal angle is relatively limited and growth will likely settle at a pretty subpar level, I think this will eventually kick in. And our sense is that though we haven't really seen big softening in core inflation numbers yet, in a few months' time from here on, in another 3-4 months' time, we will start talking about much softer core inflation number, and the RBI will react to that. As regards today's policy measure, it remains a very close call. There are loads of logic on either side, but our base call remains a 25 basis point cut in repo. Now, can they go a little more aggressive? The answer is, in that case, the RBI can deliver a big rate cut and say that that's it, don't come to me in the near future, and we have to really wait and watch. But the difficulty there is RBI had been so very hawkish in their guidance till so recently, it might actually make things difficult for them to react that way. But keeping all options evaluated, I would put my bet on 25 basis point rate cut.
That final question, do you think we should not get fixated about a rate cut, because indirectly we already have a rate cut in the system? OBC has announced one, SBI has announced one, PNB has announced one. So since most lending rates have come down, directly and indirectly consumers and corporates, they are already enjoying a rate cut.
There had been some softening in rates, but on a sustained basis going ahead, if you need to see softer rates, you really need to see support from the central bank's point of view as well. See it from the other angle. There had been some softening in rates, but if you actually see what's happening in the credit growth, what's happening in money supply growth, all these numbers are actually softening. And there is a good amount of possibility that if you don't take adequate measures now, 3 months down the line, these numbers can start looking a lot uglier. It will be pretty uncomfortable given that kind of bad numbers on growth and credit growth and money supply, given that overall growth numbers can be pretty bad at that time as well.